Every morning at 9:30 am Eastern Time, market provides opportunity, and if you know how to read it, you're gonna become profitable trader fast. I personally use this strategy to scale over hundred thousands of dollars in less than 6 months, and I will show you exactly how. And just to prove this works, I'm gonna show you live trades and trades that I take every single day in the market. So by the end of this video, you're gonna have complete system on how to find winning trades within 60 or 90 minutes after the market opens. So let's get started. As you can see, this was my last month P&L with using this strategy, and I made more than $30,000 across 9 trading days. You can see that there was almost 10k weeks, more than $10,000 weeks, and break-even weeks, which means you don't need to win every single day, you don't need to take a trade every single day, or you don't need to take a winning trade every single day. The crucial thing is that you just need to wait for A+ setups to present, because in trading, quality is everything. So with that being said, I'm gonna show you exactly how to catch these winning trades in the perfect market conditions. So I'm not gonna overcomplicate this strategy or gatekeep anything from you, and we are gonna have simple 3 steps to follow. So step number 1 is always gonna be to mark key levels / zones. That's usually gonna be some sort of meaningful liquidity, something that you can spot even 10 meters away from your screen. Then after you mark out those levels, we are gonna find our entry model, and remember, if we don't find our entry model, we are not gonna take a trade. So we are never gonna take a blindly trade like 99% of traders that lose in the market. Which means if there is no entry model, there is no trades. It doesn't matter if you marked out all the key levels, all the zones, at the end you just need to wait for that entry model. And the last step, of course, is gonna be trade management, where to put stop loss, where to enter the market, and what to target. So let's start with step number 1. Mark key levels / zones. And the thing is, throughout this whole presentation, you're gonna have this time frame window over here, so you always know on which time frame we are actually working on. So before the 9:30 am Eastern Time, before the big banks and institutions come in and hunt liquidity, you're gonna have just consolidation. So this is gonna be range high, and this is gonna be some sort of the range low. And we are never gonna trade inside of this price action. So we are always gonna wait for that 9:30 to hit, for market to show us whether we are gonna go to the upside or downside, and then we are gonna decide if we are gonna take a trade. So remember, never take a trade before the 9 am 30 Eastern Time, because you are gonna get easily stuck in the chop and probably you're gonna lose. And now if you are questioning yourself, maybe what is key level and zone? Key level is just the 9:30 am candle high and the 9:30 am candle low, which is gonna close at 9:35 am Eastern Time, because we are on the 5-minute time frame. And also this works on the 15-minute, 5-minute, 1 hour, but the thing is, 5-minute works just the best. And once you mark out those key levels, which is gonna be high and low, if you want to mark out the zone is just gonna be range high and range low, like I showed you before, so it's gonna help you to determine your bus. So after we have marked out the high and the low of this candle, we need to know if market is gonna continue the push to the upside, or if market is actually gonna manipulate the price and go lower and hunt some sell side liquidity, because every single low in the market is sell side liquidity, and every single high in the market is buy side liquidity. And in order to understand where the market is gonna go, market first needs to confirm to us that we are bullish or bearish. In this case scenario, we have high and candle is starting to break above. So we don't want to see something like this, wick rejecting this high, or maybe something like this, just a retest of this high. We always need to see good displacement closing the candle to the upside if we are bullish, and good displacement candle closing to the downside if we are bearish. So right now we are still on the 5-minute time frame, and this looks so easy, and it really is simple. But the thing is, why still 99% of traders lose is because they are blindly buying, or they are blindly selling after they see the closure, and that is just not a thing, and that is just not how the trading works. Because imagine if every single day when you see a closure to the upside, everybody buys and everybody makes profits. That's just impossible. So what are we gonna do instead? I'm gonna teach you how to wait for that entry model inside of this imbalance over here, aka fair value gap, once the market retests this zone, and then you're gonna see how to be almost every single time in ahead of every single trader. So you can see over here, this is a losing example of a trade, and this over here is a winning example of a trade. And the main difference between those two scenarios is that in the first one, trader didn't wait for the confirmation inside of this imbalance after the market came here to retest. As you can see, we never had our entry model. Market really broke above this high over here, but the thing is, immediately after we broke this high, we have a candle closure to the downside, and we never saw our entry model. But over here you can see market also broke this high to the upside, but we have a retest of this fair value gap or imbalance in the market, with wick rejecting the price over here, telling to us, and market is confirming to us that we are bullish, and then you can take a trade with stop loss underneath this imbalance or the last candle, and then you can target some sort of the meaningful key liquidity levels or multiple risk to reward. So right now, once you know why everybody else is losing in the market, it is time for the last step and the most important part. As you can see, for the last step, we are scaling down to the 1 minute time frame. So this is going to be your 5 minute high, and this is going to be your 5 minute low. And market beautifully broke the structure to the upside, and also we are continuing to break the structure to the upside, so we are really bullish, and you can also see these good displacement candles to the upside. So in this scenario over here, we are 100% bullish. So what you're gonna do right now on the 1 minute time frame is that you're gonna mark every single fair value gap that you see after the 9:30 AM Eastern time, and as you can see, every single bullish fair value gap, you can see this is bullish fair value gap, is holding the price. So you can see, first time we just came here, second time we rejected, third time we rejected, 4 times, and 5 and 6 times we rejected this bullish fair value gap, which means market is really telling you that we are bullish. And after we actually broke this 5 minute high, market came here, took out this sell side liquidity, respected this fair value gap, and guess what happened with the bearish fair value gap? It got inversed, which means market is again confirming to you that we are bullish, because this is very logical. Every single time when you are bullish fair value gap should hold the price, and every single time when you are bearish fair value gap should hold the price. And guess why this bearish fair value gap this time didn't hold the price? Because we are breaking structure to the upside, we are sweeping sell side liquidity, which means right now it's time to hunt buy side liquidity. It is very simple stuff. And the last thing that you need to do after you see the sweep, after market confirms to you that we are bullish or bearish, you need to wait for that candle closure of the last fair value gap. Then you enter a trade somewhere here immediately after the closure, and you put your stop loss underneath the last candle or the last inversion of the fair value gap. And you can easily target the opposite liquidity, or like I already said, multiple risk to reward. So you can see how simple, efficient and reliable this is, because you are just following the displacement and the momentum in the market. You can see market is clearly breaking structure to the upside, and market is clearly respecting the bullish fair value gap, which means 99% of the story is already told to you. You just need to wait for that entry model, and then without any hesitation you can take a trade, and you're probably gonna be on the winning side of the market. So right now it's time to put this strategy on test and see some live examples. Okay, so the first thing, when you come to the market before, of course, 9:30 AM Eastern time every single day, you're gonna mark out the range highs and you're gonna mark out the range lows. And as you can see, before 9:30 AM Eastern time, market is just gonna chop around, and that is the main reason why we are not gonna trade. There is no clear direction, there is just a bunch of wicks to the downside, rejecting the price, a bunch of wicks rejecting the price to the upside. So why would you risk your money if you can just wait for that 9:30 AM clear picture and then take a trade? So remember this price action before, we are just gonna use it for the range and nothing else. So right now I'm gonna play the price to see how this 5 minute candle is actually gonna play out live in New York session. And as you can see, there is gonna be a lot of manipulations, because at one moment this candle over here after the 9:30 was looking extremely bearish. But the thing is, if you are not waiting for the closure, you are easily gonna be stopped out, because market just came here, took this sell side liquidity, respected this bullish fair value gap, and right now I'm anticipating that we're gonna see these highs. And if I continue with the price, you can see the final closure of the candle very bullish. So our next step right now is gonna be to wait this 9:35 AM Eastern time candle to close to confirm to us whether we are bullish or bearish. And as you can see, this is amazing confirmation that we are actually bullish. Not only that we closed above this whole entire range over here, but we also closed above the 5-minute candle. And even if you want to have some more confidence, you can see that this bullish fair value gap is still holding the price. So pretty much every single confluence is leaning more to bullish. So now it's gonna be the perfect time to scale to the 1-minute lower time frame, mark out all the bullish fair value gaps, because bullish fair value gap should hold the price, and I don't care whether this one is gonna hold or this one. I just want to see one of those to hold. I don't care which one is it gonna be. And as you can see, sell side liquidity was taken out, which means we are gonna target the buy side liquidity. Now we just need our entry confirmation, and the best scenario would be if this bullish fair value gap would hold this first one, because market is extremely bullish and momentum is extremely good. So this would be the best case scenario. So I'm gonna leave these bullish fair value gaps, and I'm gonna focus on my entry model, and I'm gonna mark out the first bearish fair value gap, because this is gonna be the one that we are gonna use for the entry. And right now I'm just gonna play the price to see if this is gonna get inversed, if I can take a shade. And as you can see, that is exactly what happened. This placement to the upside without any wicks, market is confirming to you that right now we are bullish, and you're gonna place your trade here immediately after the closure with a stop loss underneath the last fair value gap. But I like to give it a little bit of breathing room and to put it underneath the last candle somewhere here or here, and you can target the last highs or 1 to 2 multiple risk to reward. And you can see how this played out at the end. As you can see, again, this bullish fair value gap also held the price here, and we took out the buy side liquidity one last time. So usually what's gonna happen after this move, after the best move in the New York M session, market is just gonna start to consolidate, chop to the upside and chop to the downside without any certain direction. So it's crucial for us traders to never miss this move after 9:30 AM Eastern time, because that is the most meaningful move, and that is where the most money is made. And as you can see, I executed this trade at 9:58, and this trade lasted for 3 minutes, and it ended at 10 AM Eastern time, which is like 3 minutes of work per day. So that is pretty much all you need to know for this strategy. You just need to focus on those breakouts, you need to focus on the displacement. These are the candles that you usually want to see, something like this, not something like this. So remember, always wait for those breakouts, wait for those manipulations, and then let the market confirm to you whether you want to take a trade or not, with inversing the fair value gap, last fair value gap on the 1-minute time frame. So that's gonna be it for this video. I hope that you enjoyed. You still have a bunch of videos breaking down this strategy on my YouTube channel, so you can check that out. And without further ado, smash that subscribe, and I'm gonna see you in the next one. Peace.